Welcome to Reliable Wealth Guide, which is all about making money concepts simple. From stocks, inflation, compounding, wealth building, I explain financial terms in easy language so you can understand how money works in the real world. So, what exactly are stocks? Imagine you and your friends want to buy a giant pizza. It's too expensive for just one person. Everyone chips in a bit of money. When the pizza arrives, you each get a slice, right? That slice is kind of like a stock. A stock is a tiny piece of a company. When you buy a stock, you're buying a small part of that company, just like your pizza slice. If the company does well and grows, your slice becomes more valuable. If things go badly, it can shrink. Simple, right? Let's say there's a cool toy company called Fun Toys Inc. They want to build a new factory, but they don't have enough cash. So they sell little pieces of their company, stocks, to people like you and me. If you buy one, you become a part owner of Fun Toys Inc. That means you get to share in the company's success. But why would anyone want to own a tiny part of a big company? Well, there are two main reasons. First, if the company grows and makes more money, the value of your stock can go up. You could sell it later for a profit. That's called capital gain. Second, some companies share profits with owners by giving them a little money every year, called a dividend. It's like getting a bonus just for holding onto your slice. Now you might hear people talk about the stock market. That's just a big marketplace. But instead of fruit or toys, people are buying and selling stocks. The most famous stock markets are the New York Stock Exchange, NASDAQ, but every country has their own. You don't need to be a grown-up to understand how it works. Imagine a giant online game where people trade pieces of companies all day. The price of each stock goes up and down, depending on how many people want to buy or sell it. If lots of people want a stock, the price goes up. If nobody wants it, the price goes down. It's a bit like trading rare cards at school. But here's the important part. Stocks can go up or down. Up, down. Just like your favorite game can have good days and bad days, companies can have ups and downs too. That's why some people say investing in stocks is a bit like riding a roller coaster. It can be exciting, but you have to be ready for some bumps. So, how do you actually buy a stock? These days, it's pretty easy. You can use an app or a website called a broker. You decide what company you want to own a piece of, and with a few clicks, boom, you're a shareholder. But remember, it's smart to learn as much as you can before you start. Never invest money you can't afford to lose. And here's a fun fact. Some of the biggest companies in the world, like Apple, Disney, started out small. People who believed in them early and bought their stocks sometimes made a lot of money. But there are also companies that didn't do so well, so it's important to be careful and do your homework. To sum it up, stocks are tiny pieces of companies. You can buy them, sell them, and sometimes get paid just for owning them. The stock market is where all this trading happens, and prices go up and down based on what people think the companies are worth. And that's the basics of stocks, explained as simply as possible. If you liked this, hit subscribe for more easy money tips. And remember, learning about money is the first step to building your wealth. See you next time on Reliable Wealth Guide.